Well, good morning, everybody. Well, good morning, everybody. Let me get a couple of the echoes out of the way. Sorry for the late start. Today is Friday. It is March 20th, 2026. Good to have everybody here. Yeah, just did have a little bit of a late start here. I was just off in my La La Land charting, but good to see everybody. Good morning, Wes. All right. Let's go ahead and jump right in. Markets are not really giving us any strong indication of whether we should be looking to go long or short just yet. A couple things that should be notable as we bring it up that are little heads up and clues about what's going on is we see the US dollar, which is kind of had it almost looks like it wants to continue to go lower, okay, which will bring the FX markets. Now, we are very much a lack of economic reports today, okay? We really don't have anything till Baker Hughes comes out, but that's never really a big market mover. Notice how the dollar is responding here, and then we have the 10 and the 2-year yield, okay? Almost like they're going different direction, okay? Our pre-market, the trend is about 1.2. That's a little more on the bullish side. And we do have the pre-market indicator. It has gapped up. Okay, so the NASDAQ pre-market indicator, which is produced by the NASDAQ exchange, okay, has a 92% accuracy or correlation to traders' sentiment at the open. So a gap up or a gap down it implies that trader sentiment is either bullish or bearish. Okay. Now we're gapping up a little bit. Okay. So a little more on the bullish side of things. Our volatility index, the VIX is also moving up about, I think, 0.71 or so. Okay. So we're kind of getting a lack of direction. Okay. And that's okay. That's what we want to gather from this information. Okay. Now, if we had all the dollar and the 10 and the 2-year yield just having charts that look almost identical, we have the trend high or the trend low, a gap up or a gap down on the pre-market indicator, and information on the volatility index, we would have a different opinion. Okay. So there are times when we use all of this information to understand whether the market is going to be bullish or bearish as far as the session. Okay. So let's move that back over and let's take a quick look at our equity indexes as we're looking at the pre-market. A very notable piece of information, it goes along with the lack of direction from the dollar yields, trend, pre-market indicator, volatility index, okay, is that the equity indexes, the S&P, the NASDAQ, okay, and I'm referring to the prior session's range, okay, so inside day on the NASDAQ, S&P, the Dow is still broke out by a couple of ticks, but mainly an inside day. Now, all of these little pieces of information are leading us to saying, hey, it's better that we wait, because on an inside day, and let's just take the Russell for example. The Globex range has not pierced the prior session's high or low. Okay. Now, when we have an inside day, we have noted and documented over many years here is that the opening of the session tends to be a little bit more choppy. Breakout trades often fail. Momentum kind of shows its face and then it disappears real quick. Okay. So we are utilizing information outside the price chart and on the price chart to help us understand, what is the trading environment? Well, inside days tend to be choppy. We'll look for areas where we have a demand zone or a supply zone in play. Okay. Let's see. And, just keep all those things in focus. Okay. The other thing that we'll add to this is notable the volume on the Dow 30 stocks. Even the video is a little bit on the light side, 30 minutes before, 25 minutes before the market open. Okay. When you gauge the volume and the inside day and all the other things we have just mentioned, the dollar, the yields, the trend, the pre-market indicator, and volatility index, you see that there's a very much lack of pre-market volume. Now, the lack of pre-market volume, even though we're seeing stocks gapping up or gapping down, okay, invites a lot of volatility. Okay. Other notable things is the daily charts on the S&P, NASDAQ, Dow, and now the Russell are all below the 200 simple moving average. Okay, that's kind of leaning towards more bearish market conditions. Okay, now all of this information that we have just gathered says, you know what, the equity indexes are really in flux, and we really don't know or have good clues about what we're going to be doing. Okay, and that's okay. Also, another notable thing is on inside days that the gap or the 5 p.m. close, okay, and gap fill area, price often fills the gap the same day. Okay, so that does give us kind of a direction. We anticipate price to move near the open. We also see that around 10:30 Eastern to 11 a.m. Eastern is where we have the better trading environment. So all the things that we've just been talking about, the volume, the inside day, and so on, is leading us to say, you know what, it's better for trading the equity indexes to wait a little bit longer. We also had lack of economic reports. Okay. So the market does give us overwhelming clues of when to be waiting and when to be aggressively trading. As long as we start studying these things and watching them day in and day out as part of a pre-market routine, you will start to accumulate this information and be able to glance very quickly at Dow 30 stocks, inside day, dollar, and so on and so forth. You'll be able to say, okay, this is a day that I need to wait a little bit longer. I need to look for zone entries only, okay, and not try to take the fair value gap type trades. Okay. Now we do have a lot of different fair value gap type trades. Okay. But when the market is, or the indexes in general, are lack of direction, okay, and the fair value gap type entry is more momentum and directional trading versus a zone is more the reversal, okay. We start saying, okay, well, for the equity indexes, I just need to be a little patient today, wait for things to open up so we don't get caught in the chop. I may look to smaller or larger time frames to get a better feel for the market. Okay. But in general, I should go and look at some other products. Okay. So let's step outside the equity indexes, and we have the Japanese yen, British pound, the euro are coming out of the little fair value gaps. Also copper coming down. Okay. And I think we're a little bit late on each one of those. Natural gas also a fair value gap. We're making lower highs. Okay. And we're seeing the Aussie dollar also making that move. Now, as we start putting pieces together here, you're going to realize that I kind of missed the boat just due to the timing of when we start our presentation. Okay. We missed out on a couple of good entries where the risk would have been smaller. Okay. So we're waiting. So for one, what I am waiting for is on gold, is looking for the entry, and I'm using a little larger time frame. We had a massive move, almost over 7% yesterday, where price came down on the daily chart. And we might be looking at potential reversal, okay? Or at least a bounce back up of about 50% of the. Okay. Yeah, we're recording on the YouTube. I think we might have lost it. Harvey, they've been getting some pretty big weather down there in Indonesia, so that's all right. We'll keep moving forward on that. So you'll probably be back in a little bit. The rest of the team is in China, in I think Beijing right now. So I'm all alone. Anyways, gold, looking for a place to enter, a little more aggressive. And gold does drop if there's news or economic reports and things like that. I'd be looking at either the 46.24, kind of use a little more of a confirmation if it turns at the upper level, and set the trade up for about that 4600 if we get a very strong drop. Okay. So when we have inside days and the indexes are in such a way, we will plan on waiting a little bit longer. And we'll be looking for zone entries and so on. All right. All right. Let's see. I really want a good opportunity to make a trade, but the more that we dig into this, we're seeing that the market is in a tight range and inside day. Okay. So let's go and set up a couple of other things. Around the market open, we'll look for the tick Q and the tick to see whether there's buying or selling. We've already got some indication from the pre-market indicator that trader sentiment is a little more on the bullish side. Okay. Now that doesn't, just because trader sentiment is more on the bullish side does not provide us with a trade opportunity at the moment. Okay. So I'm looking for gold, come down a little bit lower. And let's step out and look at a couple of the other products, mainly to some of the commodities. Okay. Little higher time frame. Let's drop, see what wheat is doing. Sometimes it's most difficult doing a live trading show when there's nothing really to jump in front of at the moment. Hey, good morning, Matt. Good to see you. And thanks for keep posting all your charts. I do have other students that have been making some very positive comments about your stock picks on the Discord room. So they really love it. Uh, Soybean meal just took off. I haven't looked at soybean meal in a day or two. That one already worked. We got soybean meal just coming off of that. That's an opportunity to make a trade. A little higher time frame. It is pretty far up there, but we've seen the fair value gap working and we don't have an opposing one. Okay. So when utilizing a fair value gap type entry, okay, we want to make sure that when we identify that 3 candle pattern, which is right here, that we use the low of candle number 1. Harvey just checked in. It looks like they're having some, oh, there he's back. Yeah, no worries, Harvey. We got the YouTube is recording as well, so we have that. All right, so let's set up soybean meal. We're trading the May contract. The May is the letter Q. Okay. I'm sorry, the letter K. Okay. Let's see. We'll start off with one contract here. 326.60 would be our stop loss. And we're just actually we got to wait another couple of minutes before the market opens. Thank you. Soybean meal. Now, I'm looking at other products other than the equity indexes at this point because of the things that we put together earlier, talking about market conditions. The indexes are a little bit uncertain, lack of economic reports. So we will be relying on really whatever breaking news stories come out. Okay, and that can be pretty volatile. Okay. So the markets are waiting as well. So as far as the indexes and whether banks and are coming in to buy or sell, we need to give it a little bit extra time. Okay, let's see. Soybean, that one's already underway. Corn, corn was one of our picks. We're looking for corn to pull back. Yeah, thanks for popping back on, Harvey. You know, sometimes the Wi-Fi can be a little jumpy down there. Okay. Just seems like we're approaching the market and much of the short-term trade opportunities are just eluding us a little bit. Okay. Let's bring up crude oil. Crude oil on the 60-minute chart, the higher time frame, still shows that we are in a trading range. Okay. Along with the exchange traded funds, we've seen that that trading range has been pretty consistent, and we can also see where the Qs has a long way to catch up, at least to the downside. Okay, where we can see the Russell, the Diamond, and the SPY already doing the manipulation to the downside. the Qs have not done such a move. So it appears that the Qs may try to catch up. So if we're looking for shorting up opportunities, utilizing the NASDAQ or the NQ may be a higher probability trade environment there. Okay. But look how choppy things are. Qs are also below the 200 simple moving average, actually using that as kind of a resistance here. With the Qs drop or with the NQ dropping and the Qs indicated down $2, that would be showing that the 200 simple moving average on the Qs would be that resistance area. Okay. Next level down, 583.91. Okay, which would bring the NQ a little bit lower. Okay. So since we're looking for zone entries only, we're using the leg base group of candles to help us identify where we have that potential trade entry. There is a small fair value gap area. And I'll be looking for the leg base. Let's go up 1 minute. Get the right picture. Utilizing our leg base group of candles. Back to the 5. And just utilizing the price chart. As we build this out, we can see that we had support over on the left-hand side and the high pivot point on the middle. Okay. We're seeing it based on the structure. We made a higher high before price took out the buyers. Okay. So that tells us our zone is up a little bit higher. Now the risk of the zone is still pretty wide. I mean, we're looking about 40 plus points, 41 point risk on the NQ. Okay. Taking an entry at 424,562. And remember, avoid taking the fair value gap type entries when we're on an inside day. Okay. And we can see that the NQ is an inside day. We also anticipate the gap to fill the same trading day. And that puts us right up in that area about 24,612. On a smaller time frame, that'll put us slightly higher for the gap fill. Let's put a little reference point right there. Where is that gap fill? Okay. There we go. So allow yourself a little wiggle room and a little extra confirmation that price may change direction around this area. Okay. Now we have been utilizing the AMD method and approach, the accumulation, manipulation, and distribution. And we can see that part of the New York session, most of the Asian session was in that accumulation range where prices drop down. We might see that manipulation. Okay. Now, we still need to look for a solid entry for the distribution. And sometimes that distribution can give us kind of that fake move up and then eventually continue lower to find the leg base. What we do know about the accumulation, manipulation, and distribution is that manipulation ends in a leg base group of candles, and it did not over here. So one of the clues is that down below this level, we're looking for that leg base group of candles to find the end of that manipulation area. Okay. And that is much lower. Okay. This is where we're looking for the end of the manipulation. We're just trying to find a way to get into that where we can manage our risk appropriately. Okay. Remember, inside days, the fair value gaps can get run through quite often until we break outside the prior session's range. Okay. So I'm going to set this trade up on the NQ. First profit target will be a fair value gap at the bottom down here, 24,382. And as price approaches up here, I'm just going to set my alert. Where's my alert? Remember, we want zone entries only. Okay, so once the alert comes on, we'll return back to this one. Okay, S&P, pretty much the same thing, inside day, looking for the gap fill and a zone entry. They might say, well, why aren't you going long? Well, we don't have a place to go long just yet. Okay. And we're still looking as we had the accumulation down below, the overnight session here, the Asian, London, New York session. We put those pieces together. We're still looking for the end of that manipulation. Okay. Dow. Also inside day, looking for the gap fill. Happens a high percentage of the time. If we're going to get gap and run, you will be gapping outside the prior session's trading range. Okay. And let's grab the now we can certainly utilize the fair value gaps as a price target. Again, if we're still in manipulation and we need to go below this level and look for the leg base, I think we had to go way, way back. Below 46. There we go. What date is that? August 24th. Wow. Okay, so what we're doing with the supply zones and demand zones, we're just looking for where we might find those institutional traders. Okay. And we're looking at using zone entries only. So a zone entry go long on the Dow and a zone entry to go short. These are particular places. Now, because we're an inside day, it's going to be additional risk to try to take fair value gaps or take a breakout up or a breakout down for that. Okay. Yeah, let me bring up the, now we got the 10 and the 2-year yield and the dollar shooting up. Okay. And the trend just dropped below 60. It looks like there might be some more selling. In Q, well, the indexes are going the opposite direction. I'm just waiting for some of my charts to catch up here. Well, the NQ was the most bearish one, but we're seeing that due to the light volume on the Dow 30 stocks, we're seeing it, that whipsaw condition coming into play. Not much help from the Mag 7 or Magic 8. Give me just 1 second. I'm going to pause the screen so I can get my data to catch up. Still here. NQ's approaching the demand area. I think we're going to go right through it. Sorry for the technical difficulties here. See, Harvey, you're not the only one that's having computer challenges. There we go. Catching up. Just as a glance over here, notice the S&P dropping lower, Dow shot back up, NASDAQ dropping, Russell's moving up. That's again, as we were describing earlier, these are the pictures. Inside days tend to be choppy like this and a little more difficult for trading. Okay. So we would when we get a trade set up on gold. Hopefully that'll be an opportunity as well. NASDAQ is just about ready to hit a fair value gap. And now we're starting to get the other indexes to drop. All right, let's double check the news. Oh, that's what's going on. Okay. Getting some good old Trump tweets out there. think Q got a nice little bounce. No, I would love to take that little bounce off of this fair value gap. Okay. But what we know about inside days is that gaps often fill the same trading day. Okay. And that the fair value gaps do not often work well. We need to wait for a zone entry. Now, when you have different entry types that you follow, okay, when it happens, sometimes you just program yourself to just react, take the trade. Okay. But the conditions that we led up to this morning indicating that, that the inside day, that these potential trade opportunities, like a fair value gap entry, often fail. Now, you might chalk that up as, well, I got into the trade, but I'm just staying too long. Okay. No, the conditions led us to this saying, hey, this is elevated risk. And if I choose to take that entry, maybe I should just look for just a quick little bounce. Once you start identifying the market conditions, okay, and how you will apply a trade, okay, you will then start to see the longevity of staying in that trade. Okay. Now we're getting a nice little bounce on the Qs. Oh, sorry, the NQ off of that, but don't allow it to suck you in. Okay. Notice that there's more down ticks and down volume coming into the market for the NQ. So it's just like a one-to-one little bounce off of this level. The inside day was one of the fastest ways we can recognize the clues. Okay. Now, things could certainly change direction. Okay. Especially if there's any more uh, truth postings, as far as what's going on with the war. Okay. All of those things are uh, certainly a factor. And one of the things that we did post in our pre-market routine, okay, markets continue to be a little certain, meaning charts and something outside the charts like lower liquidities. Sometimes we call these cracks in the market. Okay, so the lower liquidity is causing a lot of this additional volatility. Dow 30 pre-market stock trading volume is getting lower. Okay, can cause greater volatility and whipsaw conditions around the open. We have a lack of economic reports. Okay, today is also quadruple witching and last trade date for the March contract for financial products. Okay, so everybody must be out of the March contract and be in the June contract. So there still might be some of that shuffling around. The US dollar 10 and the 2-year yields were not correlated. This also leads us to that choppy market condition. Okay. With the inside day, trades taken later in the session tend to work out better, more profit margin. Inside days lean towards zone entries only, avoid breakout trading or fair value gap. Note where the QMI gaps up or down for trader sentiment near the open. And for today, let the market open. Be watchful for news that may cause some volatility. Okay. So as we're witnessing the use of our pre-market information gathering, we're also becoming aware of the trading conditions. And now we get to watch it play out. Okay. Now, watching it was part of our analysis this morning. Okay. Trades taken a little bit later in the session. Um, we would see a fair value gap entry often fail on an inside day. Now we do expect the gap fill. Okay. And if we're expecting that gap fill, price needs to come all the way back up. If you take note of how big the gap is and how long it takes to fill the gap, okay, you also get some additional details of when those gaps fill right away and when they fill a little bit later in the session. Okay. By taking the number of points the market gaps up or down at the open, and then studying the number of points, but how long it takes to fill the gap. Then you'll get some indication of how long it takes. Okay, you might say, well, a gap up or down of X may fill in the first 15 to 30 minutes. A gap up or down of Y might be, taken up to the London close. Okay, and then there may be a gap up or down in number of points where that gap does not often fill the same trading day. All of these things are what things that we measure and watch. Okay. All righty. So let's continue. I'm come back over to gold. I'm going to place a trade out there on gold, 46.24 half. See if we get any volatility. The hard part for me is waiting. Okay. And we're just 10 minutes into the session open, and we're saying, well, I got to wait the first hour. Okay. So I'm constantly looking for other things that I can trade or set up for a trade because we got about an hour to kill. Okay. For the equity indexes. Okay. Let's take a look at the exchange traded funds. Exchange traded funds for the Qs does look a little bit bearish, and there's not much in the way. The heavier dotted lines, these are levels that have been up there for a while, which were dark pool, large transactions, dark pool transactions that are still on the chart. And often price does return to these areas. So if we start breaking lows on the Qs, we've got a significant move to the downside, but we still need a zone entry in order to participate in the Qs and in the NQ. And that would be someplace up around here. Okay. So as we're looking around at the other equity indexes, due to the lighter volume on the Dow 30 stocks, we're just seeing that whipsaw on the Dow and mostly the S&P, just a whip back and forth. Looks like we might have an opportunity to short. Would be aggressive. We're just now, and again, it's a little bit outside our trade plan because it is a fair value gap entry, not a zone entry. Now, if you realize the inside day and such, you can understand the risk that you're about to take. Okay. So we'll be taking a little extra risk on this. I'm just getting my little impatient waiting for a trade, but I have to understand where I have to place my stop. And if you're using a fair value gap, use candle one as your stop loss. Okay. Now, if you wanted a little extra confirmation, you can wait for price to break that 66.23. Actually, I just need to be good and not take trades right away. Inside days, they just make me crazy. Let's see. Are you trading the right contract? And I know that the K contract right now on CLK. There was a question in the chat. Anybody having problems with setting up MCL trade and on the matrix? Good morning, team. You guys are supposed to be taking the night off. Now tell me, do you guys have some good hot pot yet up there? Love the Chinese hot pot. Gold, choppy. Still in our nat gas trade. I think it's time to take a profit off of that one.
Order filled.
Just hit a fair value gap, got a little bounce, and we're also in a demand zone. Crude oil. Crude oil is going to be a little tricky setting up the trade and trading it while you're in this range on the higher time frame. Okay. It's going to recognize where you're at. A lot of orders have been filled up here. So what we're waiting for is either a break to the upside or a break to the downside. That'll be the manipulation phase. on a perfect world to understand if gas prices are going to continue to go up or go down. If we're looking at manipulation and we want gas prices to go lower, then a break to the upside would then say, hey, we're close to getting some relief. A break to the downside would say, okay, enjoy it while you can and expect higher prices going up. Man, we had great trades on these. The timing was just off a little bit here. So copper, Japanese yen, British pound, nat gas did hit the fair value gap. We were looking at a trade. Yep, their bean oil just came right down also. And let's bring up corn. Soybeans. Soybean meal. Oh, it was just the wrong contract symbol. Yeah, soybean meal got a nice little bounce off of that too. Wheat. Just kind of monitoring the move. President Trump really giving NATO, says without USA, NATO is just a paper tiger. They didn't want to join the fight to stop a nuclear powered Iran. Now the fight is military won with very little danger. They complain about the high prices of oil, but they don't want to help open the Straits of Hormuz. Yeah, we're kind of seeing who the people are that are the countries that really want to help out and ones that don't. So nice job, Guinness. All right, so I'm just looking through charts right now. I know we have to wait just a little bit longer. We're not finding great entries. We're also seeing it just on a 5-minute chart. Prices whipped up, it's whipped down. We were expecting that. Okay. There are some short-term, very short-term trade opportunities there, but we still need to wait for a zone entry for higher probability and a little bit larger profit potential. Okay. So we do have the YM coming up. 46,398, 46,461. Still a lot of risk on these. Now it's still an inside day. Russell just whipped up and whipped down. We're just waiting for zone entries. Now the other products outside the equity indexes can utilize the other type of trade entries with fair value gaps and zones and so on. Come on, gold. Give us a good traded entry. It's almost like we're putting in the last little steps here. We're watching a small time frame. And we say, well, if gold is going to go back up, it needs to make a reversal. And sometimes just the reversal on a daily chart just looks like a big old tail. When we look inside, we find a way to time our entry just a little bit more tightly. Okay, so two places I'm looking for a long on gold, 4624 and 45, or sorry, 4600 area. Okay. Now, strategically, you could wait for a little more confirmation. This price is arriving very quickly. I could set the trade up there ahead of time, okay, which I do have. Let me get my other charts ready. The lower zone on the 15-minute chart has been touched one time before, and that's that 4600 level. So if you're using your first attempt at this, your stop loss is going to be about 4600. So there's a significant point differential there. Okay. So make sure you size the position so it does not exceed your maximum risk per trade idea.
Order filled.
Okay, just got filled. 4600 being the stop loss. Now I'm going to drop this down from a 15-minute chart because I want to see the turn, see if there's going to be where I can add on. Let's drop down to a 5-minute. Just recheck things out. Looks like on a 5-minute chart, I can tighten up my stop loss. It's about 67, sorry, 4607. Got a lot of profit margin upside.
Order filled.
We got a really strong arrival. See my stop loss, 4607. I have two micros. And see what, even just a couple of micros, we're looking at a pretty decent stop loss. What we're looking for is the information over here on the left-hand side of the chart Okay, we're seeing if there are any leftover buy orders still at this range. Okay. And so far, it's given the picture that there are some buyers here. What we need to see is if there is enough buyers and a lack of sellers to send price back up. As we look up and left, we're going to set our target for an opposing zone. First target's going to be roughly back up here, 46.72. And then we got a second target, 47.11. Every trade has risk on it, okay? We use the information over on the left-hand side of the chart, see where banks and institutions stepped in to support price. We know what that picture looks like. Then we use a couple of different ways to enter, whether we're using a fair value gap or whether we're using a leg base type entry. Okay. All right, we're gonna have to let this one cook a little bit. Let's go check out our equity indexes. We're still about 30 minutes away from participating in the equity indexes, meaning that 10:30, 11 a.m. Eastern time, often a better place for the trade opportunity. NASDAQ. Okay. Notice how our first level, we got a nice bounce off of it, but it ultimately failed. We're still looking for a demand zone. NASDAQ large time frame 24,088. Yeah, that's well below this level here. Dow, no gap fill. Waiting for zone entries. Russell, waiting for the zone entry. Start to see a little pop on nat gas. There is some news about the LNG with the nat gas type stuff that we need to be paying real close attention to. It's going to take a little while for them to rebuild some of that infrastructure. So that may cause prices to go back up. Okay. Also look at the end of the New York session going into the Asian and London session, started London session. We did have that accumulation area and then manipulation. So I'm just waiting a little longer for some opportunity to splice in on that gas. I'm taking some heat on gold as we look for the buyers. And there's also a leg base that we just touched right there. So a zone entry. Ooh, almost got us. Missed us by a tick. Yeah, just barely. Gold does have that overshoot. Looking at the indexes. Yeah, as we were talking earlier, the Nasdaq has the furthest to go down to catch up. Russell is testing the low of the session. S&P just broke it. Watch the time. It's 10 o'clock Eastern. No economic reports, so we're still waiting for price to come into, maybe it's going to intersect with our prep screen zone. Now, what else is notable is that the Apple and NVIDIA, which are some odds enhancers for us, they're not selling off aggressively. Well, this is more about the futures dropping. S&P is down 58 points. Oh, sorry, the ES is down 58 points. We have 12 down stocks negative over 94 cents and 3 positive. Okay, that leaves us with 9. 8 cash equals negative 18, and futures are down 56. Futures are oversold relative to the cash market. Okay, so we are looking for futures to bounce up based on futures to balance out with cash just after the open here. Okay, so and we're still looking for the gap fill. We just need to intersect with the demand zone, place to have a good entry. And we want to make sure that demand zone is approached right on the quarter hour. Yeah, might have missed the NQ for the bounce. Give it just a little bit longer to work through. The markets are just settling out, just trying to figure out what they want to do. So let's look at our internals, bring them up. Trend is low, time to go. So there's some selling coming in, and that's backed up by the tick Q in a sell program and in the tick. So there's more down ticks than up ticks. Okay. So even though the market's moving higher, well, when they move higher, if these do not change, then they're still selling into that move. Right now, the tick, NYSE tick, and the cumulative tick for the NASDAQ composite are showing that there's more sellers than buyers. We're also seeing that there's more declining issues over advancing issues, and we're starting to get some pretty strong movement on the volatility index. So a little bit of fear is coming into the market now as we see the equity indexes trying to approach demand, but also by looking at the internals and putting that piece of information together, okay, that trying to catch a bounce or a rebound, dead cat bounce, whatever you want to call it, okay, right now could be very short-lived because all the other in exchanges, as far as the NASDAQ and the New York Stock Exchange, they're still showing that there's no buyers stepping in yet. Okay. So even though we get a short-term bounce on the S&P or some of the other charts, it may just be that, a short-term bounce. Now that would be good to continue to move lower for the S&P coming back up to a fair value gap. Okay. But what we recognize with the S&P, NASDAQ, Russell, and the Dow is that we need to wait for a zone entry. Okay. S&P on a 5-minute chart does have a leg base group of candles. And inside that, a fair value gap. Okay. Okay, that gas got a little bounce, but has not committed to a move back up yet. Crude oil. Still taking a little heat on our gold trade. Trump is putting a lot of things out there right now. Wow, the 10-year yield is shooting higher. Dollar's moving up nicely. So we're starting to get a little better correlation between the US dollar 10 and the 2-year yield, which will change our trading environment and the outlook and what we can participate in. All right, so we're looking for the Qs to come down and touch that 88.6. Other things to note is that we should only be looking for short-term moves, not a trend change, especially with the Qs in the NQ below the 200 simple moving average on daily charts.
Order filled.
We got stopped on gold. Okay. Gold has come down to the next level. I'm gonna come back in on gold.
Order filled.
Okay, we had two levels that were there, so the first one we took a risk, got in. Okay, and then we got stopped out. We gotta manage that risk and got big hit on the second one. If they found some buyers, notice how the arrival came down. It kind of tapped on the brakes to slow the car down and then came right into the demand and shot right back out. And just the way the price responded from one to the other, it appears that there are more unfilled orders around that lower level than the upper level. But not much to do on the equity indexes just yet. Remember, about 10:30, 11 a.m. Eastern is when we start to see that better trade opportunity. Where do we need to find a wall? We just hit the, we have a leg base, 24,255. We need price to arrive there in 3 minutes. Okay.
Order filled.
It's gonna be a little tricky down here. We're still seeing more down ticks than up ticks. Q's is just approaching the level, so may take a little heat on this one. If you don't want to take the heat, then just take, be waiting just a little bit longer. Almost to the prep screen zone. Notice the fair value gap on the Dow went right through it. Things we talked about earlier. We do have a leg base, a zone entry on the Dow, 45,987 and 946.
Order filled.
And a little bit of buyers down here. Target 24,371 for a bounce back up. I took another lump on gold though. Yeah, I got stopped down on gold. Okay, so what we have to wait for on gold here is a change in trend. Yeah, Robert, today is last trade date for the index or for the financial futures products. Quadruple witching is what they call it. And we'll look for a bounce. Back up about 24,370. Be that first little target. Not getting much of a bounce yet. Where's the nobody's coming in and buying the stocks up yet. Why I'm still continuing to move lower. Yeah, it still hasn't broke the Globex low. We do have a leg base, just slightly below that. Remember, one of the things we started off with is recognizing the inside day when better trades and trade opportunities would come into play around 10:30, and we still got 10 minutes to 11 a.m. Okay. So all the things that we were talking about earlier in the session, okay, are things that we document based on our pre-market routine, things that we keep in mind and in play, um, even though it's difficult, especially when you're looking for a trade and chomping at the bit, seeing a lot of price movement. We're always looking for that opportunity, but inside days are one of the biggest clues of where we get a lot of that whipsaw and a lot of that indecision. We also brought into some other pieces of information that included in that kind of reinforced that waiting on these equity indexes was going to be a better trade opportunity. Okay. I got a little aggressive on the NQ. Doesn't mean I'm going to make a lot of money on it. Okay. Just it arrived in a zone. I took the zone and realized that, like sometimes you approach an intersection and you choose to cross the street when the crosswalk says don't walk. okay? And you still get to the other side, okay. But and sometimes you have to step back on the curb. And that's kind of the way we're approaching the market today, is we know that, the crosswalk light says don't walk, but we're checking the traffic out and we're saying, okay, I might be able to get part of the way through that, okay? But we're taking on extra risk. Like this NASDAQ trade, I'm gonna adjust my stop loss. Still haven't come off the selling. Okay, so higher risk, may just get a small bounce. Or I'm gonna get stopped out and lose a little bit. We still got about 8 minutes to the bottom of the hour. So we'll check out crude oil. Crude hasn't reached the supply or demand. That gas really not giving us much of a turn as well. Got a nice steep drop on gold, and now we're waiting for basically like what we were watching yesterday in our community trading room, is we're looking for that turn where price takes out a fair value gap and creates another one. And that'll give us confirmation that we do have that turn. Now, also recognize the things we talked about, which the steep slope. This can often lead to what we look for as a V-shape reversal. Okay. And with the V-shape reversal, we take some Fibonacci measurements. We got X and Y, and we're looking for A to equal 224, 261.8, or 314 extension. So let's take a quick measurement of that. So grab your Fibonacci tool, go from X to Y. And then let's place those Fibonacci levels on there. Okay. And see which one it's lining up with. 224, 2618, or 314. Okay, so we hit the 224 extension. Okay. Now, generally a V-shaped reversal will come into play when we have the 224, 2618, or 314 extension. Okay. Now, the other part of the V-shaped reversal is to move back up. Okay. So if A equals 224, then we should be looking at B to equal 78.6 retracement back up. Okay. So as we plan for that, price has not made the turn. It still could do 2618, could do 314 extension. Okay. But it gave us an idea of what, and notice the steepness of the slope. It gave us an idea of what to look for. Okay. So the next opportunity down at 45.38. And we'll look for that potential reversal, 78.6, back to the upside. Now, I do like to wait for that candle to close. We still got about 4 minutes left of that. Okay. And if it closes right at the 224 extension, then what we will wait for is a new fair value gap to be created, an upside fair value gap. And then we'll utilize that. Once it retraces, we'll approach the trade at that point. NQ is holding on there. We need to see some more upticks start to come in. We got about 4 minutes to the bottom of the hour. Remember, when we start off as an inside day on the equity indexes, okay, there's some very strong tendencies that generally happen, and that's the gap fill, and that the better trades happen around 10:30, 11 a.m. Eastern, okay? The inside day gives us an opportunity to say, well, hey, I need to wait a little bit longer, okay? I need to be patient. Need to look for zone entries, okay? And we keep putting that storyline together. And the more we document it, the more we will be able to then apply a trade when the time is right. You'll be able to gauge your risk a lot better as well. We got about 3 minutes. Now today, we will, when we're doing the Mastering the Charts recap and review, which will start in about an hour from now, I'm just going to continue on doing some trading. We'll kind of analyze the markets and see where we're at in all of this. Okay. And just kind of hang out for about 60 minutes or so and see if there's any good trading opportunities. Okay. So it'll be a little more relaxed today in the Mastering the Charts recap and review. And I'd like to invite everybody that wants to participate in that to come back in about an hour. Okay. And we'll get going from that. Okay. Not a whole lot of trading. I'm going to be having to wait on the gold as well. Looking for that price turn. Man, we were up pretty significantly. That gas, crude oil. Okay. Let's see, Dow. We've got about another minute and a half. Let's see if we can get that pop down to 45,987. See if we can capture that entry, and then we'll look for that potential of the gap fill. Okay, bottom of the hour. How are we doing with the NQ? Just barely holding on. All righty. We're starting to see a little bounce on gold. And we're going to wait for another entry on gold. You know, right now it's holding the V-shaped reversal right there about that 224 extension. Okay. And now we'll look for that 78.6% retracement. Back to the upside. Okay. But there's no entry yet. Okay. All I'm doing is giving you a direction. The entry will come once we have a new fair value gap created. One taken out, one created. Okay. All righty. Well, that's our kind of a slow live trading room today. as far as starting off as an inside day, and Fridays do not often start off at an inside day. Okay, so some things a little different here with all the things going on outside the marketplace. So I'll see you guys in about an hour, mastering the charts, recap and review. Look forward to that. And we'll continue on from there. Wish everybody a good day. And we'll see you in about an hour. Okay. Bye now.